stream just started. It doesn't advertise yet. Um, so maybe I'll ramble a bit while we wait a few people to join. But I actually set it up as a normal discussion on some things just because I know people aren't used to me doing live. And I don't have a routine. So it's hit or miss whether somebody finds it. So I'm kind of going to just set it up like a normal discussion when I do my videos. And then if people join in and have some questions, I like the conversation. So, as I said, from freezing cold Las Vegas, or I don't know if I said it, oh my God, it's so cold out here. It's kind of funny because everybody thinks of Vegas as just desert and hot and miserable and whatever else, but that's really not the case. It's actually, we have a normal weather cycle. Once you get used to it here, the hot isn't so hot. And it's winter. I've kind of cheated. I even have a little blanket in case it gets too cold to overshare and overdivulge. But we get cold in the winter. We have the weather's awesome, and it's not as hot as people think. Anyway, I'm going to talk about a couple things today. One of the guys on the chat asked if I would talk about options trading, so I figured I would go into that a little bit. And I'm also going to talk about my experiences with real estate versus the stock market, and which I think is better or worse and why. I'd be interested if you guys have experience with it and what your thoughts are as well. Let me see something. Welcome. Okay, here we go. Sorry, forgive my punching and everything else. Live is kind of new to me as well, so I kind of some of the things that pop up on the screen. So, like I said, let's start with the options trading a bit. One of the regulars who watches the channel had some questions and asked if I could talk about option strategies and trading. When I used to trade on the floor, my brother was a professional options trading, so fortunately, I got to learn about the intricacies on top of just the availability since they were right there and I could take a look and trade whatever I found interesting. So there's two things when it comes to options, which are calls and puts. And in some ways, they're actually the same thing. They're just directionally different because the components in an option is the components in an option, whether it's a call or put. And I'll go over the main three things into it. We'll talk about like strike price and expiration date as well. But the Greek characters that the traders think about, the three ones that I focus on are kind of delta, theta, and gamma. And I'll break those down and what they are and why I'm even talking about them as we get into the options. And then the one little caveat I'll say be really careful about if you watch videos and listen to what people say. Volatility changes as you get closer and closer to when earnings reports are. And I find some of the people who are talking about option strategy kind of use that to, I don't want to say their advantage, but to skew the information. You can take an option and use a company that's ultra volatile to make it seem like it's better than it is, and you're going to make so much money. Like any other investment strategy, there's tons of risk to all of it, and you have to be careful about it and make sure that it fits what your needs are in a and your goals. Sorry, I was reading Billy's comment and got a little distracted. So I've never bought options. I have a friend and his job is investing in options. He lives in Asia. I have enough to do buying and watching my stocks. Yeah, that's why I said I don't know that I would get out of one's comfort zone, but I'll try to explain it in a way that maybe it makes somebody comfortable, that if they want to use it, they'll see the value in it. And if not, like it doesn't fit everyone. And the people who talk about it like it's free money, it for sure is not free money. There is nothing that is free money, and you're playing against a computer algorithm. Like, don't overthink it. It's not like the other guy is thinking this or that. It really does come straight down to math for them, and entering it into the system to make those bids and offers. The other thing is when you look at an option, and I'm getting a little off target of what I was going to say, but let's say it's $2 bid at $2.10 offer. Well, it's only quote unquote 10 cents wide. As a percentage, that's really significant versus a stock that's trading in the hundreds, 200s that might have the same bid offer with. So while it looks like really reasonably priced, sometimes that's the real edge of the people on the other side. Anyway, like I said, I'm getting a little off topic. So basically, a call is a bet that a market is going higher. A put is a bet that it's going lower. Now, that's if you're buying it. You can sell it, which is kind of betting the opposite. I think of selling as like selling insurance. Generally, I think that's the better way to go instead of buying them. And I use them to kind of make dividends additional, or the way I think of it is dividends on non dividend stocks. And then I might use puts to sell to either try to collect a dividend in the same way or potentially get into a stock at a lower price where I might want to buy it. But the risk is it just goes higher and you never end up buying it, but at least you collect something in the meantime. Now, the three Greek letters that I'm going to talk about that I mentioned earlier are delta, theta, vega. Delta, some people talk about it like it's the percent chance that the option goes into the money being it gets exercised. So if you are buying $100 stock and you're looking at $105 call, it would get exercised if on the day after expiration the stock is trading above $105, and if it's trading below that, it would not get exercised. So the reason they say it's the percent chance that it gets into the money is it kind of is, but it's more of the percent that it moves as the underlying stock moves. So an exact at the money call and a put actually should have a 50 delta, meaning it's a 50-50 chance that it ends up in the money, but it'll also move at half of the pace of the stock. As it moves, that delta will change. That's why I said same with the percentage chance that it ends up in the money. It's not the best way to think of it because it's a constantly changing dynamic. Now, theta is the time value in an option. So every day, an option is going to lose a little bit of value because it's getting towards its expiration date. The closer it gets to the expiration date, generally that theta starts to go up a little bit and the time to decay happens faster and faster until the expiration date. But it's a really important aspect of an option to understand if you wanted to trade them, because that's what makes a further out option be more valuable. Logically, it makes sense that the longer you have in an option, the more valuable it becomes because the more chance that it gets to that price and gets exercised. But there's actually a mathematical formula to figure out how much it is per day, and it's probably a tiny bit, but it's good to know and recognize if you're selling options, you're actually pseudo collecting that amount, and if you're buying an option, you're paying that amount each day. That's why it's not quite the same as just owning the underlying stock. And then the Vega, which all three of these are really important, as I was about to say was the most important, but it really isn't, is the volatility. When they talk about like the VIX on CNBC and mention the volatility index, they have it for individual stocks as well. So there's a volatility index on each and every stock, and it kind of measures how much the stock moves on a day to day basis. Now, generally, if a stock is falling because it moves quicker and the dollar value goes lower, that's when a VIX or volatility tends to go up quicker, and vice versa. As the stock goes higher, it tends to slowly lose the volatility. Now, as a whole market right now, the index is a little high, and I think that's because of the election on Tuesday. Not sure if it'll have a really big reaction. Historical averages are kind of a bit lower than where it's trading. It's worth keeping an eye on, and I also find that it's a good way to see market bottoms. It's very hard to see market tops, but when the volatility index kind of spikes, generally that means there's panic in the market. And if it spikes high enough, that's generally a time when a stock, if it's individual or the index as a whole, is potentially making a bottom. Now, that's a whole long discussion before we've even gotten into trading the options and how it works. So I used Amazon and kind of looked up some different option prices. Not because I think it's a great company to trade options on, but I think it's a company that most people are familiar with. It closed on Friday at $198 a share. And what I did is I looked at some options that expire this week, some that expire next month, and some that are a year out to talk about where they're trading and just my thoughts on it and how I use it. Now, I do tend to use on my trading account weekly options just because, especially with the YouTube channel, I watch so often and I'm not looking for long term moves, but it's actually all three fit depending on, again, one's like if you don't watch it might make sense to use an option a year out, and I'd explain how I'd use it. So this week again, Amazon closed at $198 a share. The $200 call closed around $2.70, and then I also looked at the 205 call, which closed around $1.07. So if you own 100 shares of Amazon, you can sell one call per every 100 shares. If you sell the $200 call and get $2.70, you get that $270 no matter what happens in Amazon stock. Now, if Amazon closes above 200, you have to sell that stock at $200, and if it drops down a little bit, you get to keep that money either way, which is why a lot of people talk about it as quote unquote free money. But you can already see the flaw, which is that Amazon's already at 198. It could easily close the week at, I don't know, 205 or 210. Like who knows on a week to basis stocks move anywhere, and that $2.70, while it's great, if the stock closes above 202.70, you've sold it for less than where it's currently trading. Now if you're perfectly happy with it at $200 either way and you're happy to collect an extra $270, that's how I would use it. And if you move further out to like the 205 call, it gets $1.07, so $107 for one call. Same theory. If it moves above 205, which is very possible, you have to sell 100 shares at 205, give up the stock, but you still get to collect that money no matter what. I often use it on the weeklies to make just a tiny bit of money. Like I didn't look at it and I should have to use the example, but I'm guessing like the 220 or 230 call gets 10 or 12 cents. And my attitude is if it moves up that much in a week, yeah, I'll be happy to sell 100 shares. And I know it's only 10 or 12 bucks, but if you do that every week, it's $500 a year. And if you have a few different stocks you're able to do it on, it can really add up, even though it's a tiny bit of money. And I don't, it just seems like extra on top. And since I watch enough, why not? Now, in terms of the puts, and this is where people sometimes get confused. If you sell a put, you're committing to buy 100 shares at that price. If the stock goes higher, you get to keep the money you've collected. And if the stock goes below that strike price on expiration day, that's when you're committing to buy the stock. The two quote unquote, well, a bunch of risks. The risks are the stock just drifts higher and you never end up buying the stock. And yes, while you collect that premium, it's a lot less than you would have made if you just bought the stock. The other risk is it goes below your strike price and then back up and ends up above that price at the time of expiration. You never get exercised. And again, you get to collect that money and it just drifts higher and you never own it. But also, the obvious in the worst case scenario, it just starts drifting lower. You're committed to buying the stock at that strike price and you're not real happy because your stock continues to go lower in price. So you have to make sure A, you have the cash in the account to buy the stock if it goes to that price, but B, that you really are happy buying it if it gets to that price level. So same stock, Amazon, and then I'll go out to the month long. This is just the weekly. The 195 put, if you sold it, you get to collect $230 for a one lot or $2.30 per option. Um, if the stock closes on Friday below $195, you've committed to buy 100 shares. If it ends up going higher, or even if it goes lower but not below $195 by the close on Friday, well, you collect your $230 and maybe you get to do it again or whatever you want to do for the following week. Again, I picked Amazon because they already reported earnings, so it's not going to be exceptionally high volatility. And again, I want to repeat it because I watch a lot of these people who talk about just selling option strategies. And a lot of times they wait until an earnings report is close and they start using the options at the week of expiration is when earnings is. And the volatility is going to be higher, making all the options prices higher because oftentimes when earnings come out, the stocks move further than what they move on typical days. Um, all right. So I still think it's a great strategy. And then the 190 put, which is a lower price point, so it's less probable that it'll close in the money, is about a dollar per contract. So you would collect $100. I love selling puts to get into stocks. And I also love selling puts because I feel like I'm selling insurance. And as long as I have the money to take the shares and I'm happy with the stock that I'm buying, the reality is I hope to just collect a little bit of money and not even take on the stocks. Um, Sandish, I'll respond. I'll talk about this a tiny bit, and for sure I'll respond to that. You know what? Actually, it's a good time because I'll just finish up real quick on the weekly, and then I'll talk about the monthly options. Um, but I like to do the weekly, and I do a little bit of what people refer to as, I think they call it the swing strategy. Like maybe I sell a 190 or 185 put, and if I collect a little bit of money, great. Um, and if I get filled on that option, I get assigned it, I'll reverse and I'll sell calls against it. Now, I think some of you may know I do have three different accounts, and I have one that I call like my set it and forget it, which is oftentimes literally I'll take the certificates and put them in a safe deposit box. Or I also have an account that does not allow me to trade online. I don't trade options in that account. I don't go near it with that. I just want to own those companies. So I just want to say that as I talk about the option strategy. Um, so both Sandesh and Chris are asking a little bit of the same question. So Sandesh is saying S&P is 100% overvalued. I feel scared even to invest in an index fund in today's market. Any tips? And then Chris followed up and said, "Yo, the market has been wild. Do you think the S&P 500 will correct after the election?" So I'll give my little disclaimer first. This is not financial advice. I think you all know that. Really, this is just entertainment purposes, and I'm just giving what works for me, in my opinion. But really, you need to do your own research and talk to your financial advisors when making those decisions. Now, I, I don't want to say I disagree, but I kind of do. I think it all goes with inflation. I don't think we're so overpriced. I also think the saying of time in the market is better than trying to time the market. Uh, I would rather see somebody consistently dollar cost averaging or putting money in every month and not trying to time it, because I know people who thought it was overvalued in 2008 or 9 after the correction, thinking it would go further, all the way through to people who have thought it's been overpriced many times and just have never gotten back in the market. The doom and gloomers always make really good arguments, and their data is true oftentimes, and it does get scary. But I find the best time to invest in things is when they are scary, and it tends to keep going. I think I'd be more concerned if we saw the market really melt up, and I know we've had like 20+% returns currently, but I don't think a ton of people are invested, and markets are really emotional. I think of the top in the .com bubble. I think of the crypto bubble, and I know it's trading high right now too. And what I saw is when you go out in public, and somebody made a comment, they got really oversensitive to this, so I'm oversensitive. I don't want it heard the wrong way. I think working is working and any job is a good job. So this is not a comment about whatever job it is that comes to my head that I think to use. But when I would go out and the taxi guy and the doorman were talking about their internet stocks that they were buying, or if I went to on vacation and the check-in person was talking about their crypto, to me that looks like a top. I think the fact that good morning, Chop Master. I think the fact that everybody is still worried, those who are investing can afford the investment and they tend to being careful, even though they think it's high and there might be a correction. It's kind of why I don't see a correction. It's when everybody dives in because it's just going higher and they hear their neighbor getting rich and this one getting rich. I also think that inflation is going to be hard to avoid. And the more inflation we have, the higher the markets go. And I'll explain why, but inflation helps companies make more money. Now, that money is not worth as much. So it gets confused with, oh, it's just going higher. But if Target is charging a dollar for an item that costs them 50 cents, and that 50-cent item goes up to a dollar, they're going to still double the value, charging $2 for it. They're no longer making 50 cents per item, they're now making a dollar per item, which is going to cause their earnings to go higher, which is cause their stock to go higher. So stocks tend to do really well in inflationary times, and I don't see how we avoid inflation no matter what. I I don't think it'll be out of control like it was, but I think the Fed's in a tough position right now where they are concerned that they don't want unemployment to get worse. It's okay where it is, and the inflation has come down, but not to really where their target was. I think part of what puts them in the corner is making that bold statement of that 2% inflation that they're not going to stop until it gets there. Maybe they get more comfortable with it in the breeze is kind of what I'm thinking. I don't think they need to be over aggressive cutting going further, but I do think they're in a really tight position and it's going to be tough going forward. But long-winded answer to Chris and to sorry Sandesh that I, I don't think we're so overpriced, and I wouldn't try to time it like that, waiting for some big correction to be putting money in. If you're concerned that there's a big correction, again, this is just what works for me. This is not investment advice. Um, I would put something in so I don't miss it if the market keeps going. And then I would be prepared that if you're correct and there's a big correction, that you still have money to put more in and be comfortable doing that and don't get scared out. It's really easy to look afterwards and point to charts and say, oh, I bought there. Oh, I would have bought there. But when you see real market bottoms, if you talk about what on at the time, you can go back to the 20s and it was the Great Depression, but even 2000, it was the internet bubble. It looked scary. And then in '08, it was the housing and the banking crisis. So that looked scary too. So it's very easy to say, oh, I would just buy there, I would just sell there. But the markets tend to look different than what happened. And I would say that the same way with a top. I think everybody thinks it looks like it's overvalued. And if we all think it's still overvalued, it probably keeps going until it just thinks like this thing's going to go to a bazillion. Anyway, very long-winded. I'll go back to the options trading because I did want to talk about the longer term ones and give different strategies on it as well. So, still talking about Amazon, I'll go to a monthly dated option. And if I go to the December 6th, so I just picked that because we're on the what fourth or fifth, fourth to the third today. So it's about a month out. Same strike prices, well, at least for the at the money. The 200 call for Amazon was around $6.10. So if you sold one a month out, pretty much it closed at 198, so $2 higher. You get to collect $6.10. The cool thing is, if Amazon goes higher, um, cool, Sandesh, I'm glad you liked it. If Amazon goes higher, you get to collect the $6.10. Maybe it goes up and you make the $2 on the stock as well. Depending on how you think of it, you lose money if it closes above like 206.10 because you only got $6.10, and it traded above that. But if the stock goes lower and you plan to keep it anyway, you get to collect that $610 either way. Over a month, that's really good return if you annualize it, but you do limit your upside, which is the negative on it. And if the stock drops $50, which I don't expect, I just throw that out there, you still own the stock. But if you would have kept it either way, at least you get to mitigate some of that loss. If you go out to like a $220 call, which doesn't sound that far, but it's 10% return in a month, which is extraordinary return. You get about 80 cents, which isn't a ton of money, but it's $80 on one call for 100 shares. And similarly, it would have to get above $220 to exercise that option on the day of expiration. Um, Again, I think it's a good strategy. I get it. I would be more apt to use the puts, especially if I like Amazon and I think it's going to continue and I want to collect some money. If I sold a 195 put, which might be a little tight to where it's trading, um, you get to collect $5. If you're happy buying it at 195 either way, your risk is it dips below there and closes above it on the day of expiration in a month, or that obviously it drops to 180 and you're still committing to buying it. But if the stock goes higher and you were only going to buy it if it got to 195 anyway, at least you've collected some money to not buy that. I know it sounds silly, but if it never got to 195 either way, you never would have bought it. And here, at least you collect some money. You want to push lower and say, well, I'd only buy it if it got to $175. And obviously, they have strikes in between all of those prices. You get $75. And again, it's not a ton of money, but it's something. You don't own the stock, and you really need it to have a significant drop before you buy it. So I tend to use the options similar like that. Like I don't get a ton of money on them, but I'm hoping they don't get exercised. And to me, I'm just collecting money on things I hope don't get exercised in some ways, with an attitude of, yeah, but if they do, it moved far enough that either I'd buy the shares or I'd be happy to sell some, and then maybe reverse and do the opposite. Like if I sold the 220 call and it closed at 225, I might then reverse and sell a 215 put. Now, stocks do tend to trend in a specific direction. So sometimes it just starts trending higher. You get filled on your call. You sell a put, maybe two, and the next thing you know, it's just gone higher. And while you've collected a little extra premium, you no longer own your stock. You've collected a little extra premium, and you're bummed. So again, another reason I would hate to listen to some of those people who sell the option strategy as free money. And for those who don't trade that often, what I like is really long dated options. So I did 1 year out ones and I did three different strike prices to show it. And I went with September of 2025. I don't remember the exact day of it closing out. But on Amazon, a $200 call closed around $25.25. A 240 call closed around $10.50, and then a 300 call closed at $2.40. Now, all three are really interesting ways to use options. If you bought Amazon on Monday, assuming it opens where it closed on Friday around $198, and you sell the 200 call. Now you're stuck in that position if the stock just falls lower and lower and lower, but you've collected $2,500 on that 100 shares. And when I do the math, it's essentially 12.5% yield or return to own 100 shares of Amazon. Now you limit your upside. If it goes higher, you're agreeing to selling the stock at $200. But if you plan to own it for a year or longer either way, you've kind of guaranteed a 12.5% return. Now, if the stock goes lower, you've lost money on the value of the stock, or similar to what people kind of say NAV when they're looking at these call covered strategy funds. But you've also, depending on how your brain looks at it, lowered your entry point. Like the way I look at it is if Amazon goes lower, I've really bought it at about $173 a share because I got the $25. I don't have a lot of upside because if it goes higher, I make an extra $2. So I've made $27, but I've made 12, over 12.5% return. Maybe it's real quick, an extra buck is like an extra percent on, no, an extra $2 is an extra percent on 200. So, maybe I've made 13.5 or 14% return in a year, and that's great return. I don't get the extra, like, if it goes up $250, I still only made the 13%, because I still have to commit to selling it at 200. But still an interesting strategy and a good way to really limit some of the risk on a stock like Amazon. More interesting to me is when I start looking out at the further priced options, also for the September a year out. So a 240 call gets $10.50. So on one option, if I sold one, I get about a little over $1,000. I didn't run the math of the percent return. And I need Amazon to go up 20% in a year for that to get exercised. Well, that's pretty good return. So I'm getting 20% return on the underlying stock, and I get paid $1,000 as a pseudo dividend to own Amazon. I kind of like where that's going a little bit better in some ways. Again, whatever fits somebody is whatever fits somebody. And same thing, it limits my downside. So I have like $10 of, I've already collected it. So if I paid 198 and in a year it's trading like, even if it's down to 180, well, I've offset $10 of that down move because of money I've collected similar to a dividend. I do limit my upside, but it had to have done better than 20% for me to limit that upside. And I don't really, if it goes up, think of it as a loss until it's above $230, which pretty good return for a year in Amazon. Now, I also buy companies like Amazon, hoping I have them for 5 or 10 years, and it's at $1,000 and it's outperformed the market over time. But I also see some value in collecting some uh, dividend payment, so to speak, by using long dated calls. If I go up to like a 300 call, uh, what I like about this, even though I'm not going to collect a lot of money, is that would be incredible return for a year. And I don't really expect to be Amazon to be trading 300 that quickly. Like I do hope it gets there in time, but I don't expect it to go up 50% in a year. And maybe I don't use the options on all the shares I have. The 300 call a year out gets $2.40. Similar to the ones that were short dated, it's not a ton of money, but if I have no plans to do anything with Amazon anyway, and if it got to 300, kind of felt like, I'd be okay selling 100 shares at $300 a share. It's only at 198. Why wouldn't I collect $200 of money that I wasn't collecting by just owning the stock? And you can do that with any strike price in between as well. But when I use long dated options, I'm generally going to be somewhere between that 240 and $300 strike price, because if Amazon's up 40% in a year, maybe I'm okay letting 100 shares go. And it also gives me opportunity to make changes throughout the year on the option. Like if the stock drops to 170 and I still just think it's going higher, maybe I cover my call and I've made whatever I've made in that short amount of time if it happened quickly, and hope that it rebounds rather quickly and maybe I find another call to sell and collect a little bit more premium and be able to take advantage of. Remember, we talked about that time decay, that it doesn't move that quickly on far out options. Whereas the shorter ones, they kind of happen more quickly and you can't, get back in and out. Now, if I look at the puts, similar, I like the year ones too for other strategies, especially if you're thinking about taxes on both of it. It can move it to a long term capital gain if you sell a covered call. So does that make sense? Like if you're doing the weeklies like I do sometimes in the trading account, it's short-term capital gains if you get taken. But if you're going a full year out, you're moving that to long-term capital gains, which is a big difference. So on the put side of things, if I sell an $195 put, now remember that's only $3 away and it's a full year out. So if the stock goes lower, obviously I got filled and it's a full year out. So I'm stuck with owning it for a year, depending on what I want to do. I'm not really going to trade in and out of it. I want to make sure I have the money to make this trade if I wanted to. But I get paid $17.75. Same way I look at it, me too, me too. I love selling options. But same way on the call, I did a percent return. I'm getting 9% to sell a 195 put that expires a year out. Well, decent return. If the stock goes lower, I'm committing to buying it, only $3 less. I don't know that I'd use one that tight on a 1 year option on Amazon. Um, but I also lower my price value where I'm buying it by about $17. So 195 is 185, 170, like below $170 a share, pay to buy 100 shares of Amazon. And I get to keep that money no matter what happens with the stock. So if in a year it's still kind of sitting around $200, I've collected $1,900 or $1,700 and change, really to just sell the put and do nothing. If I push out to like a 160 put, which is probably if I was doing a year out selling put strategy, because like I'd be thrilled to buy Amazon at $160 a share. And if I'm not going to buy it at any price above that, I get $6.05 approximately. So I get $605 to commit to buying 100 shares of Amazon at $160 over the next year. To me, that's a great trade to put on. I'd be like, all of it makes me happy. If Amazon got down to 160, I'm okay buying it there. I think that's a great price. And I get to collect money just to leave that offer in. And if it never gets filled, I get to keep that money. If a year later Amazon's at $240, yes, I did not own Amazon and I want to own it. But if I wasn't going to buy it unless it got to 160, well, at least I got to collect the $600. You could go further out and look at like I pulled up the price on an $135 put as well, and it was like $2.35. I don't know that I would put that trade on and tie up $13,000 to get $2 return over a year, but I guess it is a way of selling something that's far enough out of the money that I don't think it would happen. And obviously, it would happen if there's a real correction for some reason, and maybe if it happened, I wouldn't be real thrilled as to why it happened. But there is value to all of it, so I totally get it. And then people sometimes do spreads. Maybe you sell a 160 put and you buy the 135 and you only collect high $3, but you've offset some of the risk. I don't know if that's worth doing or not. Um, but similar to my friend Chopmaster, I love trading options too. Um, I love selling them because I feel like you're selling insurance. You're the one getting all the premium and everything. And similarly, I do the same thing. I don't want to get taken on my shares. So what he said, and I do similar. I was really lucky this week. I have a larger position in Amazon than I really need to, which is why I was familiar with it and why I used it. So going into earnings, like I said, the volatility goes up. You're getting more money for the options. It probably gives you a better return than you should. And that's why I said some people often use them to try to sell what they're selling. But I was fortunate enough, I sold the 200 call and the 177. I collected like $2.50, a little bit more on both, only because, and just for a 1 week option, but just because this is when earnings were coming out. I got really lucky that it went right to $200. And typically I would do what Chopmaster was talking about, and I would then move to a higher strike price and take less money because I like the company. I think it's going higher anyway. I'm really not looking to sell Amazon, but I did it a little tighter simply because I don't need as big a position as I have on. So if I get taken on 100 shares, that's okay. But in this scenario, it's one of the first times I stuck to my strategy and I sold another $200 call and got over $2 for that as well. Because really, I'd be happy to sell it there. But now I've collected a good amount of premium that I'll just keep doing that. And eventually, I hope that it closes above that. The funny thing is, I'm kind of guessing that the week that it does, there's probably a lot of sellers at 200 just because it's a nice round number, that it probably closes at like 215 or 220, like what Apple did, something like that. Uh, but either way, I'm happy to collect that premium and just keep selling it. But I tend to do more what he's talking about in the comments is I sell it out of the money where I hope not to get taken. I hope that it goes higher, but not high enough to where I get taken. And then I can sell an even higher call and continue to collect premium, and maybe there's that one week that it kind of spikes out of control and catches me off guard and I get taken. Generally, what happens is it just stays in a range, it goes back down, and the next thing I know, I can't get very much for the call I want to sell. So then sometimes I'll move further weeks out and look at the pricing there because of the time investment. And sometimes I'll just not sell it and wait, hoping it goes back up. Vegeta, I don't really have a who's my favorite. Oh, my favorite investor. I thought you were asking if I have an investment advisor. It's a good question. I like Bill Ackman because I like how he really dives into just a few stocks the way he does. Um, I I don't like him as a person necessarily. I mean, I'm sure he's a good guy. I just have like I have some personal interactions that I wasn't thrilled about, but that's just separate. That has nothing to do with him. Maybe he's a great guy. Um, but maybe I kind of like his trading strategy. And then I like there's a few, and you're just catching me off guard. Um, I just can't think of their names, but I know who they are when they come on TV, and some of the others. Bezos is reportedly so. Yeah, I heard the same thing. Somebody on CNBC made some comment about Bezos loves to sell it at 200. Yeah, but eventually he'll be done, and the market will have taken it. Which is why I said when I finally get taken on my call, it probably really shoots through it. I guess we'll see. Um, and then Vegeta, to go back to it, I also try not to put too much stock in it. Like I'll keep an eye on them, but when I make my little disclaimer about you have to do your own research, part of it is you do because you're going to trust your own decisions way more than anybody else. Like on YouTube, I really like this guy Joseph Carlson. Carlson. Um, and he was talking about booking.com, and I hadn't done the research myself. I thought it was a great analysis. I bought into booking, but it went up, a little bit, and I got overexcited and I took the profits, but only because it wasn't the company I did the research in. I still trust his analysis, but on both directions, like if it had gone lower, I would have gotten out too quickly as well, simply because it's his pick, not mine. I still think he's right, but I'm making my trade based on somebody else's analysis. So the reason you should do your own analysis is so that you really trust it. And if you work a job, which most people do, and you really don't have the time to be researching it to make a decision that way, I think that's where EFTs are really a wonderful thing. I think if somebody owns, again, not investment advice, I don't, but if they own the SPY and the QQQ and put all of their money in those two, they are well diversified. They may not feel that way, but they own 500 S&P stocks and 100 NASDAQ stocks. That's a pretty well diversified portfolio. And I haven't dug into like SCHD and some of the others, but same thing. They have a great amalgam of stocks that really represent the market as a whole. So if you don't have the time to do the research of the individual companies to pick what you really want, a great way to mitigate the risk of the market is those EFTs. Yeah, yeah, I like that guy. I think I really like. So those of you who don't, and look, I don't know him. I am not sponsored by him, but Joseph Carlson, I really like his channel. I like the way he speaks, and I like his analysis when he digs into stocks. I tend to go off of emotion, and I watch price action. And if you don't know my background, I was a currency trader on the floor of the Mercantile Exchange, so I'm more used to like just the movements of prices. So I don't always dig into the analytics of the earning. Like I'm well aware of it, but I watch price action more than I pay attention to doing an analysis of a company. I think when Joseph does it, I really like how he does it, and he tends to be able to stick with his picks for a long time. And boy, he nailed it on Netflix, and I can tell you all the reasons I thought Netflix was a terrible investment. And he's had a great position in Texas Roadhouse, and I just think he does a good job on his channel too. I like the way he presents things. So, Marley, I'll get to yours in a minute. You had a couple, and let's see. So, if AI is a good solution for replacing workers and jobs, where does that leave the value of money? If money, yeah, look, you don't want to know how crazy my brain gets when I think of that. Because let's even just talk about autonomous driving. Like when I do my own analysis of all the people who left jobs to go do Uber and Lyft and everything else, as autonomous driving becomes a more prevalent thing and starts to displace them out of jobs. And to your question, as that goes on to every job, like it's going to be very hard to employ them again. They've gone from being a normal job where they listened to a boss and had specific hours and everything else to making their own hours and not having to listen to somebody else. So it's not that they're not hard workers. I mean, I got a guy who used to work for me when I had a pizza shop. My God, I can't believe the amount of hours he drives. I can tell you just from, we were friendly. It was one of my managers and he was a hard worker. But based on the conversations, if he ever got replaced by autonomous driving, it would be really tough for him to go back to having a job working for somebody because he's liked working for himself as well. He's super hardworking. He does a great job, but now he's been able to make his own decisions and doesn't have to do what somebody else tells him. I don't know what AI will do to jobs and the value of money. I mean, it's a super difficult thing because the more jobs it replaces, like everybody says with new technology, it brings new jobs. But this is the first technology that I can wrap my brain around that the goal of the technology is to replace us. I see it coming in the space that I work in. I saw computers get rid of the traders back when I was on the trading floor, but it was really specific to certain industries. I mean, maybe it'll be similar and it's not as big a deal as I think, but I see it replacing restaurant workers. I see it replacing street cleaners. I don't know. And I wonder, will we have to go to your question? Like, do we have to go to UBI because people just don't have a way of having an income? And the Amazons and Googles and Teslas of the world, through their earnings, are going to have to give back to those who have no income. Like, I don't know. I don't know. Um, and why would there be speculation if the value? Yeah, all of it. Like, what's the value of a lot of things, and does the world have to go to that type of system? Because otherwise, you'll have a revolt. Like, if people have no ability to earn a living, and there's machines doing all the jobs, and then on top of it, like, why would the machines need to make money? Like, what would the world look like? Now, I don't think I'm going to live long enough to see that, but I do kind of think about it. And the port work, yeah, it's an interesting thing. And the port workers, like, I think we're going to see a new problem come January. Yes, they've hashed out, for those of you who've kept up but haven't kept up, they've hashed out the income and the raise, but they pushed off the not being transitioned by automated um, systems until after January. And my guess is they pushed it till after January because they didn't want it to be an issue going into the election. So they kind of just pushed it back, saying we'll deal with it later. But I'm worried it's a real problem because I don't see how the owners of the ports agree to not, excuse me, to not automate, to not update, not stay competitive. And I also see the employees' concern. And I've come up with my own solution that wouldn't happen, but maybe there's a way to guarantee the workers, depending on how long they've worked at the company, a certain percentage of their income guaranteed for life or for 20 years or whatever it is if they're replaced by automation. But I think it's a really, like both sides, I think it's an impasse. And I think come January, they're still going to be on the table of the companies are going to want to be able to replace people and automate and actually just keep up with other countries. Because, if we don't, do you think Canada, and I don't know, like I'm really throwing the question out. Do you think like Canada just automates and becomes really better at what they do because now we're falling behind on our port system? Like I don't, it's pretty interesting stuff. Um, and this is why I gave up speculations on markets. It suppressed the livelihood of another. I think we need to get away from monetary. Well, sure, but even okay, that sounds well and good, and I don't mean to argue, but even if you went to a UBI and guaranteed everybody the same amount of money, people are still people. And you're going to have those who do a better job of spending below their means and saving their credits or units or whatever form it is, versus those who use up all of their credits and units and then want to borrow somebody else's because they've used up all of their own. So I'll shrink it down instead of the entire country. Let's just talk about the four kids in my family. I got two sisters and a brother. If my parents gave each of us $25, so the full economy is $100. I have my brother who would somehow turn his $25 into 50 or 75, and at worst he would spend like $5 of that 25 and still have 20 at the end of the week or month or however long it is. Welcome from India, Lawrence. That's really cool. And then I would have myself that would be somewhere in the middle, and maybe I'd only spend 12.50 or I'd spend $15, but I'd still have $10 at the end. I have another sister who kind of would be similar to me. Maybe she'd spend a little bit more, but she would make sure to stay below her means. And then I have a sister who would somehow spend $50, one of us on our money, or she would go out into the outs and borrow it at an interest rate, but you couldn't stop her from spending more than whatever it is she has coming in. If you spread that out to society, you still have that same problem. So even if you went to an imaginable, like perfect utopia of everybody gets credits, unless those credits are unlimited, you're just going to have people who overspend and you're going to have people who are savers. There's no way to change people. And why would accumulation be illegal? Like, why would you limit people to only get their rations? I just, sure, it would be wonderful if machines just did everything and people could have whatever they want, but then greed would be an issue. And who's going to be the governmental or deciding factor that decides what's too much or when you can't continue to go on? Like, I, I, I think this a vision of it's all utopia is great, but I still think you're going to have some people who accumulate things and those who don't, unless literally the machines are the things running the system and nobody has control of any of it. And unless it's really wonderful, I don't picture that as a great thing. And then I picture the movie Running Man with people thinking that people are crazy who just don't want to live in that system that is forcing people to listen. Let me get to a couple. Whoops. What do I think about the effect of automation in sciences and academics? I think it's incredible. And I kind of wonder same thing. Like I almost think I envision going to a doctor and giving a blood sample and the doctor just reading what the computer tells you off the computer screen. Like I think the technologies are really getting amazing. I think that we're going to see these huge, great leaps and strides as AI gets better and better. But I do the things that Marley is talking about do concern me at the same time. I think is, you know, you look at those spending on the AI and they already have such a lead already. Does the big just get bigger and bigger and it becomes like these sci-fi movies where the corporation is running our society and just implementing whatever they think that's best for that? Like it can really go out to all things. But I just think in the meantime, as it starts to happen, what could happen in science and medicine, it's just so incredible. And unfortunately, I'm a little too old because I think some of the breakthroughs they're going to have for cancer treatments and everything else are really going to help extend people's lives. Um, I make a joke with my wife that, in whatever time it comes, that the doctor's going to come out and be like, Miss Khan, I have great news and bad news. Which would you like first? And she'll just be like, how about the great news? And they're going to be like, we just created the cure for death. People can live forever now, and you're going to feel younger and healthier and better because your muscles will be good. And it's just amazing what we've invented. Well, what's the bad news? Oh, your husband passed away a few hours ago. So I hope that doesn't happen. It's like that Alana Morris song, but what I do think the science and academics, to what Marley says, I wonder how much academics will even need as the AI goes ahead. I mean, I even look at that now. I watch my son who does exceptionally well in school, and the things that they're teaching him, and I keep looking at it, shaking my head, thinking like, what's like? It's so silly. It's just teaching him to do work. Um, but he's naturally inquisitive, so I don't know that forcing it and piling it on is the best way to do it. And I think of my own schooling and then going out into the real world, and what I had in school really had very little to what I learned on the job. So I don't know what it does to education. But all right, here's my Meta and Apple shtick to with those headsets. In terms of academics, I actually see an ability to be able to go to a class where somebody like Mark Roper is the one teaching the science class, who I don't know if you guys have ever seen it. Like, it's so cool and he makes it so much fun. But like that, you can put on your Oculus and go get your science class from the most interesting, greatest professor there is. And 1,000 people can go to the same class as long as they have the ability to grade the papers and see how people are doing, if that's even part of the education. But I think it eliminates the concern with safety in school or gun violence or any of the other issues, because you could sit in your couch at home. Now, I think there'll be social aspects that people still need to get out. But I do see this vision that maybe Mark Zuckerberg and the people at Apple see with these headsets of, not just education, but sports games and everything else, where this becomes the avenue of entertainment, learning, and all sorts of things. You put the headset on and you're actually there. I mean, how about learning about the animals in Africa and then being there and able to see, like, not have to go to a zoo, but actually traveling on your headset. Or if you're studying oceanography, to be able to go down into the ocean, just see it right from your chair at home. It's a really amazing, like, all of it really could be amazing. I go back and forth as to whether it'll be amazing or it'll end up terrible. I hope it ends up amazing for people. And I'm getting a little behind. Let me see. Um, but I do think it's going to be incredible to see it do. Um, Smart people, let us think what we can do against uncontrolled influence of AI. Unfortunately, I don't think there's anything you can do about controlled influence about AI, because as much as the positive stuff, like I do see the negative too. As it gets better and better, I envision like the telemarketing scammers and everything else. I mean, how about when you get a phone call from your mom, your dad, your brother, your son, your daughter, like it comes up from them, it's their voice. It's hey, I'm in big trouble. Can you do me a favor? I need you to send me $100, and it's not them. The technology has all sorts of good and bad. I can't imagine how bad the bad will get too. But uh, unfortunately, the people going into it are going into it as fast as they're going into it with no regulation. And the regulators, I don't know that they're the right ones to make the regulations anyway. They have this kind of blanket policy that everybody has to be responsible who's working on it, but no real definition of what responsible is. And I've even seen shows, maybe you guys have too, about people who have left some of these big companies because they're concerned with how far the AI is going and what they envision it doing. I don't know if they're just accurate and correct, or if they're the crazies that over worry, and I over worry too. Um, then I checked in ChatGPT. It listed everything in the form of table. 3 days reducing. Yeah, I mean, ChatGPT is really an amazing product. I'm sure Gemini from Google is as well. Um, it, Back to the education aspect of it, at school, if the kids are using ChatGPT or something else, they consider that cheating. I I think they need to do a better job of encouraging the kids to use it, but to use it properly in whatever form that is. Because similar to what I'm saying, I don't understand the stuff they're teaching them, because it just seems like a lot of it's knowledge they don't really need, and it's silly because you don't use it on the job. It's not like you're going to get out of college as an engineer, have some project that your boss says, can you work on this? You go home and you use Chat GPT, and it helps you find solutions to whatever it is they're asking you to get solutions for overnight. You go to work and share it with them, and them go, well, wait a second, you cheated. You shouldn't have used Chat GPT. I think it's silly that the schools are seeing it as cheating. I think cheating is putting the question in Chat GPT and handing that in, but I think using it as should be encouraged, and that the class should be doing it at the same time, saying, this is how you use it, but I want you to go through, put it in your words. Like there has to be a better solution to encourage them to learn how to use it to stay ahead, instead of simply saying it's cheating and not give them the tools to know how to use it properly. Because I couldn't agree more, the few times I've played on it, it's really amazing what it does. And even if you're traveling, like it's super cool to go on there and just plug in, help me design a 5 day trip to New York City. And it'll give you hotels to stay at, restaurants to go to, shows to see, all the tourist attractions, and they'll break down like the best things if you only have 5 days. And if you have 2 weeks, it'll change it and get like the technology is already really amazing. And I think of it as like it's the Atari version of that technology. We are so early on in the development that what we're seeing now is like a nothing, and it's still really amazing. I actually signed up. I did one video, but I signed up for the NVIDIA. I forget. I know it's NVIDIA something, but they're the AI that helps with video and stuff like this. Um, you can tell it's AI. Like it's got those voices, and even if you put your own voice in, it's still computery. And I posted one on this channel, and I did like two of a pseudo travel channel just out of curiosity because I wanted to play with the technology. And what's really amazing is you type in, do a 10-minute video of 10 best beaches in the world. And yeah, it thinks for, I don't know, 5 minutes at most. It it seems like 5 minutes, so it's probably only two. And the next thing you know, you have a video and you have a thumbnail. You can edit it and change it and do anything you want. But boom, it's created this video just from you putting in a sentence or two of what you want it to do. It really is amazing technology. Now, what I signed up with, plane flying over, I apologize, or helicopter probably. Um, Whatever I signed up with didn't give me, like, you can't unlimitedly just keep producing and producing, and they're going to charge. And I wasn't ready to spend a whole lot of money on it. I really just wanted to play with the technology and see what it was. But it's amazing to me that it's at its infancy and it is what it is already, because in 5 years I understand what the writer's strike was about. If you have a concept for a movie, uh, I don't see how you can't just punch into NVIDIA AI, and I think that's what it's called, and just say, do an 87-minute movie on a spy chasing a bad guy, and yeah, the timey tighty. That that's what the actors and all of them are completely worried about, because they already can do it. What happens when it not only do I do the make a movie of a spy chasing a, a bad guy, it's make Tom Cruise do Mission Impossible, and it'll have Tom Cruise and the other actors and their voices and everything else. I don't think it's 1 to 2 years out, but it's hard to imagine that in 5 years they won't have it. So yeah, it's pretty amazing and freaking scary and everything all at the same time. And depending on how far you let your brain run, it can run pretty far with all of that stuff. Like I said, it was pretty incredible, the videos that I did in all of 5 minutes. Now, I used up all of my credits in like a couple of hours just playing with it because I thought it was cool, and I didn't realize how limited it was. And I was like, oh my God, I did that much already. And I don't plan to get more because there's just no need. But it is a neat technology, and if you have I spent, I think, $240 for a year, and it gives a certain amount of, like, a half hour or something per month, maybe an hour of video and then something else. So if you have $240 to throw away, it's a fun thing to play on a bit. Anyway, the wind seems to be picking up. It's getting pretty cold. I want to thank you guys who showed up. It's been about an hour, and my wife scheduled a yoga class because need to get in shape and do better. But I'm probably gonna call it a day and go from there. And I'll answer Marley real quick. And how fast and far. I, that's kind of what I was saying about the phone call from your family member. Like, I know, I can't imagine how quick the hacker. I kind of wonder if that's the advantage of blockchain, because I think our great grandkids are going to look at the World Wide Web and kind of shake their heads and be like, I can't believe you guys just left your information out there for everybody to be able to look through like that. I can't imagine how quickly the hackers and develop, like, yeah, and the AI teaches itself. So it, it's going to get faster and faster and faster as time moves on, which is really crazy to think about. Anyway, guys, thanks so much for showing up. Um, I'm sure I'll do a regular video this week. I'm excited. Some more earnings coming out this week, and markets are happening every day. So have a good one, guys, and thanks again. Talk to you soon.